everybody, and good morning. Hope your Saturday and your weekend's going off pretty well. So right now, I'm just again, I'm getting used to setting all this stuff up and really learning a lot about this. Found that the best way to learn is by practice. So jump in the fire, dance around a bit, and then kind of learn that way, right? All right. So as we go in, just checking to make sure because this software is really cool. It allows me to stream to numerous platforms, but I want to make sure that I can at least get the comments where it's needed. Huh. All right. Just had a text from somebody looking to sell some commercial. So I'll get to dive into that here in just a little bit. All right. So let's go ahead and lay some ground rules for the stream. Today, if you have any questions, I want you to just go ahead and ask. Your questions. You can send it through the chat. You can DM me. You can text me, and I'll try to answer as best I can. Just so we're all aware, this is not a perfect system that I've seen yet. It seems like sometimes the comments can go missed until after the stream. So if you're asking questions, don't see it, I apologize in advance. I do want to make sure that I get back to people whenever they reach out. And with that being said, you make sure that I'm live on my others. Oh, there we go. All right, cool. And this is technology. You gotta love it, man. It's crazy. All right. So today we're going to talk about a few different things. Namely, it's going to be about private money or asset-based lending, not necessarily private money, but that kind of encompasses part of it. I had somebody think or reach out to me the other day, and they were asking to borrow. I want to say it was $175,000 for a fix and flip loan. And while we were discussing it, they said, "I thought you said you do asset based." I do. And one of the questions I'd asked was, "Hey, look, I'm going to need some documents. I'm going to need number one, a copy of your ID. I'm going to need, your bank statements just to review your cash flows to make sure that you can even pay what the interest rates are. All these other things, right?" So it wasn't, it kind of took them back whenever I started asking for documentation. So I'm going to actually open up one of my apps, and I'm not going to share this on the screen. You're going to have to work with me on that because for privacy, unless somebody here wants to come in and do an application for loans, then we'll talk about that live. But one of the things, like, let's just go through the business bank statements, right? ACH payment authorization, where essentially you just as you set up your payment structure. There's some things that are required, some things that won't be. It depends on the project and what we're looking to do. So if you're telling me that you're going to fix and flip a house, well, I'm going to need a detailed scope of work. Okay. And then we're going to talk about the draw requests. We're going to set up that system for that structure. Then we're going to talk about the valuation of the property. What does that look like? Well, if you don't have anything for me to go off of, such as a recent appraisal from a licensed appraiser, I'm not sitting here interested in getting a BPO from a local realtor that happens to be your buddy, right? So all that to say, understand that there are ways that we as lenders, we are here to serve our clients and to help people build their wealth, and at the same time understand that we have to protect ours. All right, so there's that balance that we all have to work about. Now, another thing that I want you to understand is we only do business to business loans. Recently I had somebody need to capitalize, or actually just kind of get a little bit of money for a business that they're launching. Well, they had some land, and with that land, it was about 50 acres. And I was like, all right, well, it's in your personal name. I can't do it that way. What I can do is you can title it over into an LLC. If you're willing to do that, now we can do a business to business loan. And they did, they completed that. And now we've got a loan working. It's a very short term loan for them for about $50,000 so that they can get a business up and going. And then they're just going to pay that back after a couple of months. You're going to need your LLC documents. You're going to have to verify that. A list of any members on that LLC. Those are important because I need to know who I'm doing business with and also make sure that everybody on that LLC is a signor on the mortgage. All right. And mainly because I don't want to have to take a property back. It's just one of those things that if I do have to, I'm going to proceed. Right. And I don't want to get caught up or held back. So I've got my due diligence that I have to do as a lender, just like you as a borrower need to do on your own as well. Your operating agreement. We're looking at the property appraisal or valuation. Now, this is actually kind of a sore subject for some investors because I know a lot of the times people go to banks and the banks say, well, the appraisal process will be back in about 2 to 3 weeks. Sometimes they're looking to close these deals in less than 2 weeks. So we need to get that fast appraisal or fast valuation out. And I'm actually using a company now that has been fantastic. It gives this really detailed report, and it's usually within a week we get that back. One of the great things about that report is that it gives me not only the current as is value, if I provide the scope of work and I can get an ARV or after repair value evaluation, then it's going to tell me that. And then it's going to give me other details, such as the level of rehab, such as a light, partial, or full remodel, and then what to expect per price point. So that actually allows me as a lender to be more of a consultant to you and say, hey, look, I understand you gave me the scope of work and you're going to do this full remodel. However, based on this, you might have TTS, total time to sell, of shorter time on the market here at this price point by doing a lighter rehab. Sometimes it might be more, but it's all going to come down to what's going to be the best return on the money for that investor. Now, that being said, that's not the rule. They don't have to go and do these things. They can still go along with their full remodel and everything else, but I, as a lender, get to dictate how much I'm going to loan. For some people, I have done and still do 100% financing. That means that I will cover 100% of the purchase price and 100% of the rehab. Now, there are guidelines with that. Okay. And this is going to get a little technical. So I want you to kind of be with me on this. Okay. Just try to hang in there. And if you do have any questions, looking at my chats as best I can. There we go. I think we're yeah. All right. So we're live there, live there, live there. All right. Cool. And let me go back here and make sure that I'm watching my stream. All right. Going back to my point, as we look at some of these valuations, whenever I'm looking at doing a 100% deal, I might do 100%. However, I still need to make sure that after the purchase, renovation, and everything, the project still does not exceed a certain loan to value ratio. Like the ARV, let's say, for example, a home is going to be worth $500,000 whenever it's fixed up. I need to be into that project as a lender no more than $350,000 at that point. That's going to include your purchase and your reno, right? So we want to make sure that we're not exceeding 70% loan to value on that property. And it's not as complicated as a lot of people make it out to be. It's quite simply just some formulas that once you get used to it, it's extremely easy. All right. Let me correct myself. It's extremely simple. All right. All right. So we've talked about the docs. Oh, some of the other documents. We're going to need a copy of the purchase contract. If it's being assigned through a wholesaler, I don't need to see the assignment. I need to see what terms you've agreed to through that assignment clause. A lot of the times, and I've had some investors come to me with almost a misunderstanding or a novice view of, well, the wholesaler sent me this, and it was just I agree to purchase this property according to this contract for this assignment fee, right? And I'll perform by the contract, but they don't get a copy of the contract. What? Man, you don't know what you just agreed to. So now the burden of that contract falls on your shoulders. The wholesaler's absolved. Typically, they're getting that non-refundable assignment fee locked up at title, right? So there's a lot of risk there. So you want to make sure that you provide a copy of the contract and the assignment if you're buying through a wholesaler. Once we've looked at everything, again, you didn't hear me say anything yet about credit reports. All right. Keep in mind, this is asset based lending. So I'm looking at the asset, also your ability to pay. That's a big part about it, right? So going through that, now I'm going to go and I'm going to look at the property. I'm going to make sure that I feel confident in my valuation because I do evaluation as well before we even order the true opinion of value through the services. Mainly just because I don't want to waste your money. Those can be 450 to 550, $600 sometimes, depending on certain markets. I don't like to have my money wasted, so I don't want to waste somebody else's. So I'm going to look at the valuation, then I'm going to send out a term sheet. All right. Now, if you've ever bought a house before, oftentimes you're going to recall these. In residential lending, it's called a GFE or a good faith estimate. All right. We just call them term sheets to where as we send this out, and actually that's a great reminder that I need to get a term sheet out to a borrower today. Here's a really interesting one. Like so, the real estate investors that kind of nerd out over this, I think you'll enjoy it whenever you watch this. One of the cool things that I'm doing is they reached out to me about a commercial property. This commercial property probably has a solid valuation. He showed me a 10-year-old appraisal from whenever they first got into this, and it was $160,000 at the time. He had agreed to purchase the property at 115,000. And long story short, they had to go through, argue with the seller because the seller wanted more money. Now that it's worth more, they still had that same price. So, all that to say, they've got until mid June to lock that up. They come to me wanting to borrow the money to purchase this property and another $10,000 to finish a residential flip that they're working on. So I'm looking at it and I'm like, all right, we'll do a cross collateralization play, which means that I'm going to take both properties and I'm going to put them onto the same mortgage that you're going to pay me. Otherwise, I get these two assets if you default. And looking at that, I started getting somewhat creative because they saw the first term sheet and they're like, all right, well, what about this? And is there any way that we can, maybe roll some fees? So what I'm doing is I'm actually looking at some options. Now, this isn't something that I do with my partners that I lend with. This is something that I would only do with my funds or somebody that I've lent with long enough to where they're comfortable with this structure. Initial request was $125,000. I'm looking at raising that request up to roll in their interest payments for 6 months. And then if they close the flip, they satisfy the note and everything else, any interest that would be due back to them gets refunded back to them on the HUD. Easy enough. So we're going to roll that in. We're going to roll their points. We're going to roll everything into that loan to where all they have to do is they show up, sign, they get a check for $10,000. I, as the lender, I'm already made whole. I've got the monthly payments already set. My investor is good. We're set. And then in 6 months, if he doesn't perform, that's when the fees will start kicking in. Extensions, if the lender chooses to extend, right? So that's one thing that I want you to understand. Lenders, unless it's put into that mortgage or promissory note or any of these agreements, they're not obligated to extend. If it is a 6-month balloon, which means that full amount is due in 6 months, they don't have to extend, right? They can they can demand full payment. Everything else, you've got to go and refinance. So let's just talk about that part. Little pro tip for you: make sure that your lender is comfortable giving you at least a few months worth of extensions, even albeit with a fee, to still be able to have that extension should you need it. Because I'm sure a lot of people are starting to see where market shifts are not just escalating, where everybody's tripping over to try to get into properties. Some things are sitting on the market a little bit longer. Maybe your contractor took longer to close that rehab out. So there's a number of reasons for you to have that flexibility in your loan. All right. Yeah. So real quick, I don't know why you didn't just comment through here. Yeah, this is actually it's we went to church when we lived back in Shreveport, and it was simple church. And one of their things is do good. So yes, you're correct. You are seeing Louisiana on my shirt. All right. Give me a second. I'm just refreshing a few things. Again, I'm really new on this. So just bear with me. Give me some grace. right, there's that. Oh, I think Eric's on. All right, learning to manage this through different platforms. It's interesting. It's actually a good reason to make a note. Okay. Well, with that, all right. So we'll talk about. We've already talked about like asset based versus documents required. Um, just understand that to get some of these loans, you're going to need to prove a few things. Just because we're looking at the asset, we also need to say, are you an operator? Have you done this before? Because one of the things that, and it's a pet peeve. You see some of these investors that watch a few YouTube videos, or I say investors, new people into it. They haven't invested yet. It's their first deal. They go and they finally find a deal after months of analyzing, and then they lock it up. They didn't have any money. So then they come and then they realize that I'm going to typically require at least 20, if not 30% of the purchase price down. And they're like, well, why aren't you giving me 100% financing? The deal is a strong deal. It is, but you're not a strong investor. I say that respectfully. I don't know you yet. You don't know me. So one of the things that we have to do is we have to develop a relationship. Last year, I had somebody come to me and I did a couple loans for him, a couple loans, and then I think it was like 6 loans over the course of the year, if not 8. And now they call me up. I look at a deal, 20 minutes. I get back with them. I say, yeah, you're good. I got you at 100%. It's just that fast because I know the market that they're in. They're in Shreveport, Louisiana. I'm a realtor in that market, so I've got MLS access. I can run the comps. I can get a valuation on things, and um, where their sweet spot is, I actually own properties over in those areas, so it helps me to really quickly turn it around. And because of that, there are some of these to where I'll run valuations in the markets that I'm in myself, and if I'm still not comfortable, or if that investor has a different value of what they expect their ARV or after repair value to be, it'll come to me. And then we just have that agree to disagree. And at that point, I'll tell them, look, for me to fund this, we'll go to a third party and we'll let them give the valuation. And that's how we've done a few of those. So just a little bit about the process. And let me see if I can bring up my PowerPoint from earlier in the week. Okay. And now we're just trying to do a little present. You know what? Let me pause this for just a second. I'm going to take that. I'm going to change this view. All right. This is going to look a lot better. All right. So in the hard money loan process, this is yeah, I know you're sharing a window, so let me hide that. You're actually going through and application received, we review, do the property valuation, loan terms, underwriting, and then, well, you can see it. I don't need to read it out to you. But understand there's a few steps in this. And it's mainly, again, to go back to it, I, as a lender, want you, an investor, to build your wealth. I can't do that if you go bankrupt on your first deal and tank me with you. All right. So these steps are to help me as much as they are to help you. And you need to understand that. Just like why you come out here for a new construction loan to me, or you want to build a house, or you want to remodel a house, and you've got $100,000 remodel. Guess what? I'm not just going to give you $100,000 for that remodel all at once. That is poor money management, both on my part and yours. Mainly because, and if you were in my webinar Sunday, you will have heard this story. There's so many investors that they don't know better, and they don't have that skeptical sense about them yet, right? Because they're newer. Nothing wrong with being new. What I got to tell you though is you have to be careful from Jump Street. Make sure that you're out here, that you're doing your stuff correctly. So there have been times when, I've seen other investors go out there and give the entire project, right? Now I'm talking 70, $100,000 of a remodel to a contractor. And this is no slight against contractors. I've got some great ones, and a lot of them are fantastic. But just like I'm sure you hear, it's the bad ones, the bad actors that make all the headlines, that give everybody the bad taste in their mouth. And one time in particular, a contractor took it, never showed up on the job, not even once, just straight up ghosted. So here's the question that you've got to ask yourself whenever a contractor wants a heavy upfront deposit. Why would I give you this whenever you will have no incentive to show up? If I give you $50,000, right? If it's $100,000 project and I give you $50,000, can't you just go on and get another job somewhere to go, and you'll show up at that point? However, if we structure this out and I give you, say, $15,000 as a down payment, well, now you've got a reason to show up, do the demo, do the rough carpentry. All right, now I'll give you $25,000. That's going to get you through to the next part, right? So we're increasing the property value as we're going through the remodel. And that is just a simple check and balance into keeping everything even down, so that you don't get upside down in your valuation, nor does your lender get upside down. That's why sometimes, excuse me, that's why sometimes lenders will actually send out a site inspector. Oftentimes, the people that I'm working with, because I'm still relatively small in this space, oftentimes my loans are going out to investors in markets that I'm familiar with and people that I've trusted, right? So we've built up different things, and I can work with them. One thing that I'll look at is I'll look at your photos and I'll look at your videos and I'll see where you're at, and I'll just kind of use my experience of the hundreds of deals that I've done and everything else through these processes. Is I'm going to look and say, great, I think you're ready for your next draw. And if not, I still reserve the right to send out an independent party. And it's about $250 to get them out there. They're going to take photos, and then they're going to take it back in. They'll report it up, send it over, and there's a contractor. He'll look, he'll review, and he will gauge the completion of that project. And at that point, I can either release the funds, or I can say, hey, look, you need to gap this. You need to get a little bit closer here before I'm going to give you that draw. It's a protection play, not only for me, but for you. So that's yeah, just a couple things to think about. And let me see where I was at in the slides here. Since we're talking so much about some of these loans, here's one that we did that, you know, was really easy work, right? They go in, they fix this up. You can see the before, you can see the after, and they really did a great job. But this loan was at 12% APR, and then we had 5-point extension fees, everything else built in, because it was a relatively small loan that we wanted to hurry up, get that thing done, get it back. But here is another one, and another one. All right. Let's see. I don't really have anything else. So at this point, I'm just going to stay on the stream. And, if somebody chats cool. And if not, that's cool too. So let's see. Got this, that, and the other. All right. Well, I think that's my live stream. All right, cool. All right, so I'm going to turn on some music. I'm going to get some work done, and you know, I'll be around. So just shoot a message or a text if you need anything. Oh, and if you don't like my music taste, well, change the channel. It's fine. No, that's not what I'm looking for. Is it the Everly Brothers? No, that can't be. Teskey Brothers. All right. I don't know why I had Everly. All right. So whenever I start to play this, I want you to understand these guys. I'm relatively new to them. I just heard it the other day, and the voice. So I was watching it on TikTok. One of the best comments because the guy he's got the long hair. He looks a bit like Chris Helmsworth that played Thor. Right? Anybody seen a Marvel movie ever? Um, he somebody had commented when Thor gets the Soul Stone, and man, I'm telling you, I lost it. It was hilarious. So this is the song from that. So whenever you have a chance, go check them out. Teskey, Teskey Brothers, and the name of that song is Rain. That was like a radio DJ. That's All right. Just because I feel like this might be something of value, I want to share this screen with you. And this is actually relatively new, where I'm working to kind of roll in the payments and everything for somebody's loan. The reason why I'm looking at this, keep in mind, this is a strong borrower, but also the asset. So if I'm going to hold up that interest point and the rest of my fee. And no, I'm not a Excel expert. I'm not out here doing all kinds of crazy cool things. 71, 75. Let me just make sure that zeros. So if I was to do that, we're looking at 71, 75 at closing. And if I roll it as payments. I just gave him a 145K loan. That interest is gonna have to update. Okay. That hits them right there in the sweet spot. They'll be able to apply $225 towards their title work. And the reason why I'm saying this, one property there, the other property there. This is the one that we had the valuation on as is with ARV. 160 old appraisal. Total collateral available they're going to have on this is $338,000. So what you want to look at is what is my exposure, what is my risk. So if we were to default, let's say that one page is done and now they don't have any other things, we're not extending or anything crazy. What is my recourse if I have to take this property back? So let's say $338,000 is the valuation. But let's go find out what percentage of that we're looking at. What is our loan to value? All right, we are at 43% total loan to value. You know any lenders out there that wouldn't loan on something that's strong. So anyway, there we go. Now you see what I did, what I wrote. And now I've got all these points. I need to actually update the loan. Mhm. Hey, good morning. No, not too much. Just getting some of this stuff done. Hang on a second. Let me get my earbud in right. All right. So I was going to tell you, I actually needed to go in here and get a little manual with it. So I just put it on a spreadsheet. I'm going to send this to you. Do you want it in an email or a text? All right. I just want to be able to talk through it with you right quick. All right. In that case. Oh, you're talking about the Joe Lee? Man, look, they also just caught fire this week too. Yeah, like three of the buildings. Well, you got your suspicions, right? That reminds me of one of like an old time investor joke. Said that three investors met at a conference. They were having drinks at the bar, and this was out in Arizona. The first investor says, "Yeah, I actually had a fire. I'm sorry, I had a flood in my basement, and insurance came and paid it out. And I was here, so I just used some of the money to pay for it, repair it." And the other investor said, "Man, that's amazing. I actually had a flood in my basement too, and the insurance paid me, so I got out here." Third investor said, "Man, it's crazy. I had a fire. It was really just weird. It was a squirrel went up there, chewed on some wires in the attic. House caught fire, burned down. Insurance paid me out, so I took the money. That's how I come here." And the first two investors looked at the other one and said, "How did you train the squirrel to go up there and eat the wire?" So anyway, just because that whole stereotype about arranging accidents, right? But yeah, no. Well, right quick, did you get that text? We'll go over it right now. You might have to turn your phone sideways. All right. So you see that the processing, doc prep, wire, and all that, that's all the same stuff. And then we've got everything broken out to where if you borrowed 125, your 8 months of interest, the points, everything else is 17,170. All right. And that's where if you were to make monthly payments on the interest and bring money to closing for the 7175. So you can do that, or I can up your loan because so I can up your loan to 145, which would take your interest payments. You see how it's a little bit different, and then the other fees are the same, but it's 19,775. All gets prepaid at closing, so you'll get 125, like 225 from the bank, and the 225 can go towards recording fees or whatever else. But that way, you wouldn't have to hear from me for 8 months. Take your time. Take your time. That's all right. That's right. That one is like if you do the 145, all I need to know is when you sold that house and whenever you pay it back, right? Otherwise, in month 8, I'll touch base with you, but this is already prepaid, all of your interest and all. Yeah, if you sell it back in month 5, you would get 3 months of interest back. It's all prorated out. Yeah, I mean, unless you just feeling generous and wanna give it to me, but no, you would get it back. Yeah, yeah. The 142 would be basically what you're in for the loan amount plus the 17, right? So over the next 8 months, you'll pay a total of $10,000. So if we did a calculator on that, it's like 12 or 1400. So yeah, 1250 a month is what you would pay me every month, and that's your interest only payment. So the only difference is this one, you give me money every month. The other one, I'm already wrapped it up, prepaid. Yeah, yeah, because there's a small, it's $1,000 more on the or on the points because it's higher amount, and then the interest is based off of that. Yeah. So if you look at it, let's say instead of 1250, it's 1450 a month. So 200, 1600, so 2600 total difference in fees. If you look at it like that. And again, that's just one of those, we can do it either way. I just presented that second option where you don't want to have to worry about cash flow out or anything like that. You got the equity to where I can work with you. Yeah, and like I said, no commitment either way. I do need to know so I know what to get my attorney to write up the mortgage for. All right. Yeah, and like I said, I'll be prorated out, so you'll actually at the due date, right? Whenever it's like, hey, look, you got to give Lee back his 145, it's going to be less whatever unused interest you have. No, that's right. That's right. You satisfy that debt in 60 days, then you want to get that 6 months of interest back at you. Yeah. Yeah. And then that removes the lien from both properties and everything else. Now, just one thing I want to let you know. We are gonna have to get the verification of the insurance, okay? Now, that's not uncommon, I'm sure you understand that I'm gonna require insurance for the property. There's gonna be something called a mortgagee clause, to where if for some reason, I ain't saying that you will go catch fire to it, but if there was a fire on the property or any kind of loss, that I actually get my money back first, less, anything that goes back in to fix it back up to get it to that condition, right? So, that's just one thing to be aware of, that there will be that policy to where I'm still protected in the event of loss. But, all right, well, with that being said, what I'm gonna do is I'm gonna have my go ahead. So, it's the cheapest, but keep in mind, and this is one thing that a lot of people don't understand, Coach, is that a lot of people, whenever they go out there and they get a landlord or what's called a rental dwelling policy, right? So, your regular on your house, you've got an HO3, but then you've got a rental dwelling policy on your rental property. Here's the problem. With that property being vacant, let's say that somebody comes in there, burns it down, right? And insurance goes in there to look to pay you, and they see that that house is vacant, nobody actually lived there, and you didn't have what's called a vacant or builder's risk policy. That's what you really want for flips. You want a builder's risk policy, also known as a vacancy policy. So that's because there's a high risk of vacant properties getting vandalized, broken into, burned down. So that's why it's gonna be a little bit high for that policy. But what you don't want is for insurance to come out here and say, "No, sorry, that's on you." So that's why you wanna make sure that you have that proper policy. And then, of course, you've got your go ahead. It's going to be a builder's risk endorsement. It depends on the companies, right? If you need a insurance agent or somebody to help you out, I use a couple different ones. I got Wayne Watley, I got Tag Long, State Farm. So, let me know what you need. I can at least make some introductions. But, the insurance is a big thing, right? Hopefully for your protection. We also have, my title and everything else to help me. But in that event of that loss, keep in mind, you still personally guarantee these loans. So that's something that you don't want to do is have the wrong policy. Builder's risk policy, yeah. And I'll send an email out, and it'll tell you what we need to do from the insurance companies. It'll go out to I think Brooke said that Linda is going to be handling it all over at United Times, so we'll have her. Yeah, I'll get that email out to her, and then you'll be copied. I don't see. Let's see. My girl's gonna be on vacation this week at the attorney's office. So, you said you wanted to close like the 10th through the 14th, somewhere through there. That should be okay. Yeah. So I could actually, if you trying to close on the 19th, I'll have the funds over there no later than the 18th. Yeah. Okay. All right. So what I'll do is I'll actually email her and get her to prep the docs for a closing on the 14th. All right. If you need something, let me know. Hey man, what's going on? Well, I was wondering how that's going. Are you guys enjoying the RV life? Yeah. I tell you, Northwest Louisiana, I have not missed it in the past few months because you guys have been pounded. We've had a little bit of storm damage to some of our rentals. Yeah, let's just say it's a good time to be a roofer up there. Well, right quick, let's hope none of that was the commercial units that you're trying to sell. You didn't have any damage there, did you? Yeah, yeah, yeah. Now, is there a CAM, fee on that, or do y'all already have it priced out to where whenever you email it to me, it's gonna show me the if I had a tenant, for example, somebody that wanted to rent it, what the price per square foot per year is? I'm sure it's let and then CAM on top of it. Oh, y'all did some gross leases on that? Well, it's new build, so your risk is relatively low. I mean, I wouldn't worry too much about deferred maintenance, right now. So you get a 5-year tenant in there. Okay. Okay, so, but no warehouse space or any kind of storage in the back or anything like that? Yeah. Yeah, like concierge medical? Yeah, I got you. So you're looking at about 1925 a month plus CAM on that is where you're renting out at? Okay. And what are you, and I mean, you can email it to me, and I know it's probably hell trying to recall it while you're handling a big old motor coach going down the road. So I won't keep you too long on it. But let me know whenever you get a chance. I'll text you over my info. So yeah, I've got a couple people in mind. I might pitch it to them to see what their thoughts are. Yeah, Okay. Yeah. Okay. So there's a little bit of building in there. Do y'all have any TI in that 1925 a month or 21 foot? Any TI? Are you delivering like that gray shell, or are you giving any improvements or anything like that as far as allowances? Yeah. But I mean, it's finished out though, right? It's not like just roughed in. Okay. All right. Cool. Yeah. Just sell the shell. Okay. All right. Yeah. Let me see if I can shop it around to a couple people. And I was going to tell you, I've got a loan here that I just worked up for a guy for 145. He's collateralized residential and commercial building. Worth over three. I've got it at 350, 360 value. But, he only needed 125, but I stacked in my points, fees, and everything else, prepaying the interest rate for 145. If it's anything that you and Trent want to talk about, let me know. If not, I just thought I'd ask while I got you on the phone, but if not, I got some money to start back in this weekend on my loan. So I'll be able to cover it, but I figure I might as well. I want to be like y'all when I grow up. Hope y'all on vacation. Who's going to run the shit show? Well, I'll get there with you one day. Um, yeah, well, we're not closing till we're not closing till the 14th. I'll need to know, obviously before then, so it's not pressing. And if you want it, cool. If not, no big deal either way. I've got other stuff coming down the pipeline I can send you. But let me see what I can do for you on this commercial stuff. Okay. All right, Jeff. It was good talking to you. Y'all be safe. All right, buddy. All right. Well, if anybody's watching, I've got a coaching client at 11:30. So, look, I hope that you enjoyed what we looked at earlier. Maybe you got some insight, maybe you didn't. Either way, if you do want me to discuss anything, please go and comment. Leave comments, give me some feedback. Let me know what it is that I can actually share with you to bring value. Anyway, y'all have a great day. Take care of yourselves. Mouth, and we're out.